I am your host, Ryan Flynn. I'm here with Big Beat. Congratulations on making it to the end of the week. It is almost mice down, feet up time. But first, we have a really exciting webinar to share with you today. So today we are going to be going over gaps. We are going to be going over what they are, how they're formed, and we're going to briefly cover a strategy on the gap and go strategy. We're briefly going to show you how to do that using the tools in Pro. So Steve, why don't you take it away? Why don't you tell us what gaps are just to begin with?
Hey, Ryan, thanks for having me today. Man, what an exciting webinar today. With lots of people here today in the webinar. And I can tell you why, because this strategy of gapping is very large within Wall Street. It's a very long tested strategy, one that many will know about, and one that's pretty much easy to master as well, as long as you have the very basics of finding them and very basics of how to implement them. And those two ways of strategy will actually help you, for the most part, make a winning strategy play. So I'm going to tell you what a gap is first, and then kind of walk you through a little bit and show you a few as well today. And then we'll move from there. So the first thing is, what is a gap? Well, it's very simple. In a chart, normally it's Japanese candlesticks that we do mostly, you'll see a gap from one entry point to the next entry point. So it's usually like a big gap, whether it's on the upside or the downside in a chart. And we are looking for gaps that are large, right? Unusually large from the previous close or from the previous bar. A gap could be in the middle of the day when a stock is halted, right? It could also be in the beginning of the day when it's opening, or it could also be when in the closing of the day, maybe there are some heavy selling going on, I would say. So the first way that we see is based on a catalyst of news. So largely we are seeing lately, of course, it's earnings season, it's about over now, but in earnings season, whenever a company beats big, big beat, or they miss big, you're going to see a gap within that stock. Now, a lot of times when earnings come out, they come out before the market and they come out after the market. And so that happens, you know, you got to be able to play the pre-market and you got to be able to play the aftermarket. But if you do that, you're going to see gaps. So let's say, for example, the other day when NVIDIA did quite well, or when Walmart had a big beat, there was a jump between the past bar and the next bar. And usually that means that there's a lot of flow of money. And so what we're looking for is we're looking for volume. Now, volume is very important when you're making a thesis to buy or sell something. We want to see that the idea of that earnings beat was good. And if it was, then play right along. It's not a chase. It's that you've seen the same thing that everybody else has, and your thesis is the same. You might not have gotten in at the same time. Now, as you know, my thesis always says, never chase the market, but there always are gaps. And 9 times out of 10, you'll find out that when there is a gap, especially on opening gaps, you will see a stock continue to move on up. Same thing at the end of the day, you'll see in the market closing, there could be some profit taking happening. The market's pushed up all day, and then all of a sudden the next one is a drop in the stock. And so you'll see a gap there as well. And usually whenever you see a gap going into the close like that, you'll see a continuation in the next day. All right? Now, there's a couple of things also. I'm a biotech trader, so I'm always looking for that news during the day that will also pop a stock in the biotech sector. Excuse me. So we're always looking for those gaps everywhere in the market. Now, what Benzinga Pro does very well is we have signals that will give you when a gap happens, right, or a price spike. And in this situation, Ryan, if you don't mind, we'll flip your screen around here and let's pull up, let's show them exactly what the signals tool looks like within Benzinga Pro.
You got it, Steve. So here we go. I went ahead and shared my screen. What I have here is the signals tool that you just outlined with the opening gap selected. I also have a news feed in case we need to review news for the cause of that gap. And I also have a details tool that happens to be on the chart tab. So where do we go from here?
Well, honestly, I will tell you the first thing I always do in the pre-market, I always keep my eye and have a separate little tab going on just for those opening gaps. So when that bell rings, I have everything else unchecked except for in signals just on opening gap. And the reason being is I want to see what those gaps are. Now, I'm already going to know most of the news, right? Because I would have already been listening in earlier to Charlie or to our news feed, but I want to see what the actual gap is. So in the mornings when you see those numbers and you say, okay, XYZ stock is up 12% in the pre-market, I still want to see continuation of that in the actual, we call the cash market when the 9:30 opens. And so when that happens, you're going to see that actual line of news and signal go into signals, and I want to see that continuation. Now, Ryan, I'm sure that there are several examples of today, but let me show you an example in the past and tinker charts and show you a few examples of what a daily gap means from a day to the day. Now, the first one I really kind of want to look at is Netflix, NFLX. Let's look at the daily chart on that one and go back a few months. Now, now I'm looking to the side here so I can see it. But Ryan, you can definitely see where there are gaps being made. If you look back there in July the 17th, that was a huge gap meant from the day before to that next day. Now, there are two things we always want to look for when we look at gaps. We want to look at daily gaps, which means intraday gaps, or we want to look at gaps in a longer term prospect. And in this situation, Netflix created a long-term gap. Now, I've been doing this 28 years, and my mentors always told me the same thing. Steve, I wasn't big beat back then. Steve, if you see a gap that large, expect that gap to be filled. Now, what does that mean? What did Jesse Curry mean by that? And he was saying that in the past days, eventually that gap will get filled. In other words, days coming past, eventually that stock will fill that gap or will close that gap. Now, if we look to other stocks, let's look at Google, Googl, and we go back a little bit there, we will also see several gaps. Now, if you saw, there you go, there are two major gaps. There's one back there in May where it closed down sharply, and you'll see another one, that's right, less than May there as well. Two major gaps. And you know what Google did? They closed those gaps. So within the next month, they jumped and also created a new gap in July. So you'll see back there in July, a huge new gap to the upside. So if you are paying attention and you watch those two closing low down gaps, you would have bought back in and caught that big gap long before there was any good news coming into the market. So now we haven't seen any gaps since then. We have seen the market pushing higher and higher. So when the next catalyst happens in Google or whatever, in hopes it creates a downward gap, we would look to also close that gap as well. All right. Another good one example is Tesla, TSLA. Very good. So as Tesla chart comes up here, we're going to notice one. There is a huge gap back in July 1st. You'll see it back in July, that to the downside. And if you're playing that to close that gap, well, not only will you close that in September and made some money, you'll see a little pop there in September, but then come mid-October, you would have been playing it for an even bigger gap play. And of course, you saw what happened in Tesla. They had some great news. There's the catalyst, but you would have already been in Tesla. Now, many people ask me all the time, Steve, I want to be in a stock long before it pops. Well, if you look at a long-term daily chart, you're going to find those kind of gaps, and that's what we're looking for. And when someone says to me, gap and go, that's exactly what it means. That a stock gaps keeps going, and then I'm looking for gaps in the past to even go even farther and even make even more money, and that's the key to this game, right?
And Steve, I just wanted to jump in here real quick because you just hit on a monster point. And looking at your example here with Tesla, sure enough, you have that gap that you were talking about at the end of October. You see that after it popped, okay, it traded back down a little bit and then it went. So this is exactly what we're talking about when you have a gap and go. You got this huge gap here. You had some continuation. It then pulled back in, consolidated a little bit, and then ran towards new highs. There's actually another small gap in there. So this is a really great example because this is exactly what we were talking about.
Ryan, why don't you show us, let's find a few examples of some opening gaps this morning even. How about that? Why don't you show us some of those?
Yeah, great. So I actually really like the setup that you have here, but I also want to, using the signals tool, but I also want to try to do this using a different tool for the sake of the example. So what I'm going to do is I'm going to leave the details chart up. I'm going to go ahead and close the signals tool and the newsfeed tool, and I'm going to go ahead and add movers. And the reason I'm going to add movers is because this tool, especially in my opinion, is incredibly easy. With just a few clicks, you can find things that are gapping every single day. So I'm looking for gaps to the upside as I am a long bias trader. I'm not really interested in gaps to the downside at this point, although the point still holds for downside gaps as well. I'm going to click on gainers, and then I'm going to click on pre-market because I want to know what stocks are moving up in the pre-market. What stocks have the potential of creating this gap that we're looking for? And then I'm interested in scanning the entire session. I'm not interested in scanning little segments of the pre-market. Rather, I'm interested in scanning the entire pre-market. So in here now, in my movers results, I've only got things that are gapping up. But one of the things that I'm particularly concerned with is volume. So actually what I'm going to do is I'm going to sort this by volume with the highest volume at the top of the list. And then using some of these results that have high volume, and then I'm going to look at the percent change. I'm not really interested in something that's up 1.4%. I'd like to try to collect something that's got a little bit bigger of a gap. And right above that, I notice we've got AMAT, applied material. So I'm going to go ahead and click on that. Because I have the details tool already loaded, it's going to load that up in the details tool, and it's going to go right to the chart because I already have that. And boom, right away, you can see this last candle here, a massive gap, just what you were talking about in your last example. And the other thing that I really like about having the movers in the details tool is one of our proprietary things here, the WHIM, the why is it moving. Right away here, in one sentence, I can very quickly look and say, oh, Applied Materials shares are trading higher after the company reported better than expected Q4 EPS and sales results. That makes complete sense. Now I know why this gap is formed. And now I think, okay, well, if they had better EPS, this may be a candidate for continuation. So right here, I have it on the daily chart. What I'm going to do is I'm going to switch this over to the 5-minute chart, and this gives us a little bit better picture of what's going on here. Now, in the Tesla example that we just covered, I was still on the daily chart, and I actually showed you that after a couple of days, it ended up pulling back, and then it turned back towards the highs. So you can do that. That's a little bit more of a long-term or a longer-term, perhaps intermediate. Or if you really wanted, you can also try to day trade this. So in this particular case, here we go. We've got a gap. We see that this initial candle looks like it pulled back a little, but then it started to continue. So one of the other things that I like to use in conjunction with looking at this gap is an exponential moving average. So I'm going to go ahead and add moving average exponential. I'm mostly concerned with a short time frame in this, so I'm going to leave the default 9 EMA, and I'm going to use this as my guide for support. So if I was trying to trade this, one of the things that I would want to see is if the stock did start to pull back, I would want it to pull back a little bit closer to this 9 EMA, because then I would have a little bit more confidence that this stock is going to continue. You can see that AMAT just raged as soon as the market started. It just kept trading up. Even some of these smaller red candles didn't bring it all the way back to the 9 EMA. Now, sure enough, this is exactly what happened. So at the top of this, it actually did pull back to the 9 EMA. Now you can see it's consolidating. So the bulls and the bears are fighting over which direction this is going to go. This could be a prime example for something that has continuation. Now, as you mentioned earlier, nothing's 100%. So of course, we're not going to make any guarantees, but this is one of the ways that you can actually identify this. Let me use another example here real quick. So going back to the movers results list, I'm going to click on Roku. That's another stock that I recognize. Oh, look at that. We've got another why is it moving banner for Roku. How about that? So I can very easily tell why this stock is moving. This looks like it was a analyst rating change. So I'm going to do the same thing here, all right? It's defaulting to the daily chart. I'm going to click on the 5-minute chart, and I'm going to take a look at the gap here, and sure enough, here we go. So I'm going to do the exact same thing that I just did. I'm going to go ahead and add the exponential moving average. And now you can kind of see exactly what I was telling you. You had that gap here right at the beginning. It pulled back a little bit towards the 9 EMA, and then it continued upward. So if you were looking for something for a day trade here, hypothetically, you could have entered right around this 150 level when it came back towards the 9 EMA. And then as the EMA started to round off, you could have exited right here at 155. That's a $5 move in what looks like Not very long. Looks like maybe just an hour. So the whole point with the gap and go strategy is once you can identify gaps, you can kind of get a feel for what it is you're comfortable with. Some people don't like playing stocks that have huge price tags like this. Some people are more into low float stocks. I personally like volume. I like to be able to get in and out. So this is the type of opportunity that I would be looking for. One more real quick example here would be AMD, which is also in this movers list. If I click on AMD, it's going to, of course, default right to the daily chart. You can see right away there's a bit of a gap. And if I turn it over to 5 minutes, this becomes even more clear. Now, here's another example of exactly what we were talking about. So let me go ahead and put the 9 EMA back on this chart. You can see here that it gapped. It pulled back towards the 9 EMA. It then tried to run a little bit more, but it failed later on. So this is something that you have to be aware of. If you're looking to do something that's more intermediate, you probably wouldn't want to do it on a 5-minute chart. You'd probably want to do it on the daily chart that you outlined earlier, Steve. But if you're going to be sitting there and if you're going to be watching your position or you're just trying to be in for a little bit, you can try to do it intraday. The key here is that whenever you see a gap in either direction, whether it's up or down, that doesn't mean it's going to continue that way. That means you have an opportunity to play that continuation. And it's very easy to spot. Pro gives you great tools to be able to find these in either direction that you want with a few clicks of your mouse. You can do it every day before the market opens, and you can just pick your spots.
Now, one of the things, Ryan, early in the mornings, or if I want to see if the continuation is going to happen, I'm also looking to see which way the smart money is playing it as well. And for me, I'm always looking to see continuation within the options market. So if a stock, like you said today, like AMD, was running, I want to know, is the smart money chasing as well? And if that's the case, then I'll play along with the wave too. So you want to show them how we pull up in the news feed or in Signals those options alerts?
Absolutely. In fact, that's a great tip. Let me go ahead and just add Signals right to this workspace. Oops, sorry about that. All right, let's go ahead and add in the Signals tool here.
Because if you see a lot of good news coming out, like on AMD or Tesla the other day, the continuation has to happen. So I want to see that bull thesis continue by seeing a lot of call buying. Even if you're playing it short term, then I want to see the Friday calls. But if you're playing it longer term, I want to see month out calls. And if they're what we call out of the money calls, which means more like lotto calls, then that means they're very bullish, right? If they're in the money or close to the premium strike price, then that means they're in the money, obviously. Then it may not be as bullish to me, but I still want to see that. I want to see the back end of anything regarding to call buying or what I call the smart money out there. And if you look
well, here you go. What I've done is I've actually pulled up the Signals tool. I've loaded only the option activity signal that you spoke about. And then I simply added a filter to filter it just for AMD. So that's all we're looking at right here. That's all I really want to see. And here are your results. So great tip, Steve. Why don't you walk us through this here?
Well, very simple there. The top one there, I look to the left here, I'm showing the December 20, $34 calls. Now, that's obviously going to be in the money there, but the reference there was 38.56. So it looks like they're at the ask. They were selling calls. They're protecting themselves right there. So obviously, longer term, they're bullish because they own the stock, right? So I want to see a lot of call sweeps. There you go, near the bid. There's 1,000 of them when the open interest was 24.89. So you can see that whoever's playing this, big call sweeps coming in, as well as they are playing with things that are not heavy on the open interest, which means that they are playing stocks that they're trying to take advantage of the volume.
Right. And actually, this was a really good example because just like you had mentioned, that first option alert that you mentioned, this is a deep in the money call, right? So the reference, the stock price was actually 38.59 and they were buying the 34 calls. So we consider that pretty deep in the money for AMD. Now, the second one that you outlined is the exact opposite. This is an out of the money call, right? The reference, the stock was trading at $39, and here they are buying up the 43 calls, expecting this to continue. So that was a really great point that you just mentioned. When you're buying the calls that are actually in the money, perhaps that's for protection. But if you're buying the calls that are out of the money, the trader is expecting this to continue. And like you had mentioned, this is the smart money. So this is definitely something to pay attention to. This is an excellent tip, very easy to add. And Pro does this in a very easy way for you.
It's interesting. If you go back to a chart, let's pull up a day chart on AMD then.
I'm just going to get rid of the signals tool. It will make this chart a little bit bigger, and then I'll switch it back over to daily. There we go.
And you'll see that whoever's in here is very bullish. But if we go back and we pull up now, let's pull up a weekly chart now.
There you go.
There you go. There's what's happening. You see all of that call buying. You'll see two sides. It is an ascending triangle there. The bottom is where the bottoms were. The lows were higher. And you'll see that the highs, the top of the charts, are higher. So it's an ascending triangle. This person is very bullish. They believe in the company. They believe in the news stories that are out there. Of course, it'll also wrap up into my sector calls.
Oh, are you dropping another teaser for us? How about that? Well, you know what? I went through the examples that I had from this morning real quick. Are you ready to go ahead and go with your sector calls?
Are you ready for them? Today, I'm not giving just one. I'm giving three away today.
Oh my gosh, we must be getting closer to the holidays. If you're giving away three, we must be getting closer to the holidays. Well, let's hear about it. Let's hear what they are.
Well, that's a good segue, Ryan. The very first one is holiday retail. I've been saying this now for a while, but now it's starting to come to fruition. As you saw yesterday, Walmart it's on fire. I've said it all along, go to your Google Gmail, go to your promotions tab, look up and see if retailers are out there. Are they giving out big discounts? The answer is no, they are not. Are they preparing for Black Friday? Are they preparing for Cyber Monday? Yes, they are. But the deals haven't been that good. I'm actually in the market for a new laptop, maybe. And I'm looking at AMD and I'm looking at Intel processor chips, right? And I'm looking at the prices a little bit, and they're not giving me the prices that I really want. I want a good deal, and they're not. So that means that margins are going to be very, very good going into the holiday season. Probably right after Cyber Monday, you're going to see prices go right back up. And then, of course, right after that, you have college football. I think you like football, right? And the first thing you got to do is buy a big screen TV, right? So, and you do that, right? They're not going to keep those prices down. So those margins are going to be up. Retailers should be good going into the holiday season. I'd stay long anything during the holidays, but come January, February, come expect some of the pullback even before the Super Bowl. I know people buy TVs for that time too, but by that time, all the credit card bills will be coming in and people will be pulling back on their holiday spending. But expect Q1 numbers to come in good for the retailers, especially the big box retailers like Costco and Walmart and Big Lots and things of that nature. All right? Ready for the second one, Ryan?
You know it. That first one is still pretty good, but I'm ready. All
right. So I have been saying for a while that the streaming wars are about to heat up pretty serious. Now, you've all been watching TV, and everybody's been saying Disney Plus, and everybody's been saying Netflix and Apple and Amazon with their Prime. Look, the truth of the matter is there are a lot of choices out there when you are streaming. I'm guilty of it. I have them all. I like watching TV. My wife and I like to sit on the couch and watch TV every once in a while. And the truth of the matter is they are all fighting over for my dollar. My goodness, Disney Plus was only $7 a month. I was like, my God, it's less than a ticket to go to the movies. So yeah, why wouldn't I do that? But that's not the answer. The streaming wars is giving you a better clue in what to invest in now. And what's happening is, and you're finding this out right now, day one on Disney Plus services failed. Did the service fail? No. What failed was they couldn't keep up with the subscribers. And so I'm telling you right now, cloud services are going to be huge. Yes, you can say cloud plays. I've heard it all before, Steve. But people are spending more and more time at home watching more and more TV streaming. They're spending more and more time on their internet, like webinars. They're spending more time doing things like event booking, booking for shows. I just spent 10 minutes yesterday trying to get Elton John tickets, right? And so all that took web services, cloud services in the background that we don't even know about, that when it gets overwhelmed, they have to update their services and they got to pay even more to keep that going. So are there stocks out there that are in this sector that I'm looking at? And the answer is yes. Are you ready for those?
I am.
No, the answer is not Amazon. It's not Amazon. But what it is it's Datadog, DDOG. It's going to be Okta, OKTA. It's going to be VMware, VMW. It's going to be Five Networks, FIVN. It's going to be Cloudera, CLDR. Any of those companies that are in that services sector for streaming will help you, I believe, make some profit. Now you can see the market's already moving up there for VMware. What do you see there back in mid-May there on Cloudera?
Oh, you know what? Sorry, I was getting ahead of myself and I was changing ticker to a different one. Let me pull up Cloudera real quick.
I just noticed it myself. If you notice on Cloudera, yep, see what I see in the middle of that? There you go.
I see a humongous gap that got filled.
Now look back in March, Ryan.
Oops.
There you go. See that gap back? There you go. So look to see those getting filled. That's exactly what this is about, is having a thesis in trading and using technical analysis to help that thesis working out, as well as you get news, as well as good vibes going the right way, right?
So, Steve, I got a real quick question here, and I would also like to encourage our users to ask any questions. Anyone that's attending this webinar, if you have questions, go ahead and throw them out in the chat. I'm going to go ahead and ask you one right now. So, we just, using the Cloudera as the example, we just saw this large gap here. Hang on one sec. Looks like this large gap back in June. It gapped down, and then it did exactly as you outlined at the beginning. It very slowly grinded back up, had another gap here, and then, of course, on September, it then, of course, completed filling that gap. Now you can see that it is trading sideways, as you've mentioned to us before, or consolidating here. Now, you had just mentioned that there is another gap back from March. So let's say, let's just say hypothetically that the cloud services call that you're making right now does actually continue. Would you expect this stock to grind up more and then attempt to fill this gap? Do you not have enough information?
I'll tell you exactly how to find that, Ryan. And if you look back at the March example, if you see the bars before it, you'll see especially some heavy bars right before it are red. They're telling you that there's something going on in this stock that was a sell signal, and the news confirmed it. Vice versa, you'll look in June, you'll start to see the day before that big sell-off, there were heavy volume bars saying that there's a good chance it's going to sell off. I would be looking for some green bars, volume bars, before the pop. But if you start to see those, better be getting in.
All right. So real quickly, just to carry on that example a little bit further, you did actually see that while it was grinding up here. You did see a couple of big green bars, and then you did have that gap to the upside. So this is literally exactly what you're saying.
Perfect. That's how to find them before they happen, Ryan. Not just waiting for the problem. You're finding them before they happen.
That's exactly right. And then to continue to use that a little bit more here, looking at the volume bars during this period of consolidation or sideways trading, we don't have any large volume bars of either color. So perhaps maybe that would be your signal. The next bar that you see, maybe that will give you an indication on where to go. Great example, Steve. That is tip top right there. That is what I'm talking about. You got any more for us? You got anything else you want to go over with the cloud services?
It's very simple for me. As you probably didn't know, I've been not feeling well this week. I've been battling a cold and sinus and almost a flu, I felt like. And so I wanted to find out for my own self just how bad is it out there for everybody else. I believe you also had the flu a few weeks back. And it really seems that, that when I'm making a thesis, Ryan, I always want to know, is it backed by news? So I'll do my search. I'll look on FDA websites. I will go look up the flu and sinuses, and yes, that's it. Flu and sinus and cold medicine is my next sector I'm calling. Okay, Steve, that's an easy call. It's holidays are coming up. We're all going to get together. It's cold outside. It's snowing. But the weather is unusually cold. People are unusually staying inside. And, of course, it helps with natural gas as well. But the reality check is it's a little colder than normal. And so I wanted to go back and find out what companies are actually on the forefront of making even better drugs to stop us from having colds and flus, right? If anybody can solve the colds, boom, that company's worth trillions, right?
You got that right.
All right, so I went out and I looked up and I found out that there was a company out there that was doing the actual research for me already, that Eastlake did that, and they told me that every year that cold and flu is growing by between 5 and 6% every year. The number of people getting colds and flus every year growing by 5 to 6%. That was astronomical for me. That's across the globe. So I wanted to find out, and I've got a few stocks here that I'm going to give to you. It's in this sector. I'm not telling you what to buy or sell, but I'm going to give you these stocks. The first one is going to be BHC. We have seen a run so far. That's Bausch Health. They have been doing quite well. Next one there is going to be Regeneron, REGN, Novartis, NVS, Merck, MRK, and GSK, which is GlaxoSmithKline. Now, I am the son of a pharmacist, so as you know, I'm a biotech trader, and I love this sector already. But to see that this is really helping a large number of people, which is my thesis in biotech, always find the companies that have, they're looking to fix bigger problems out there, and how good is that drug, and what are their chances of passing the FDA? Do they have a good track record with the FDA? And do they have a good track record of actually doing all the good studies, the phase 1, phase 2, and phase 3s? So there's my last sector is going to be in the cold and sector and blue sector.
So just to recap for you, we have the holiday retail, we have cloud services, and we have cold and flu. Those are the 3 calls that Big Beat is giving you today, middle of November. So great. We will keep watching those. I got to say, Big Beat, I got to give you some credit. Your calls recently have been on fire, and fuego, as they say. So hopefully you can continue that streak here. All of this seems good. One of the things that I really like what you did here is you explained your thesis. You weren't just throwing darts, right? You're actually picking things that you know about, things that you can monitor, and things that hit home and make sense with all the stuff that's going on. So that is a prime example of how you should make calls like that and pick trades. So great job. Thank you very much for sharing that with the Zingers today.